Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, and I'm joined by my co-host Kevin Hinks. But Kev, let's bring in our next guest. That's going to be Landon Swan, the co-founder of LikeFolio.com. We're talking Under Armour today, ahead of earnings tomorrow morning. Now, Landon, I always think of this as, maybe a competitor to Nike, not so much Lululemon. Are they innovating enough to be included in that conversation with some of the other athleisure wear out there? Because this just seems like one of those, a guy goes to the gym and does some squats like your brother Andy, he's got Under Armour on. It's not like that fashion type of thing that a lot of other brands are out there, peddling.
Yes, that's a good point. I will say that I think they're moving in that direction. I think they're trying to get the quality and perception of quality up, and they've done a good job. Their happiness is actually up. Consumer happiness is up about 8 percentage points year over year, which is a really big move. And so they're getting to that point where consumers do see them as a higher quality product. And I think that's obviously very important. Otherwise, you're just going to get the squat bros wearing it, like you say. So it's important. And I will say that, when you look at just overall the company, we've had declining mentions in Under Armour for quite a while, showing a bit of a struggle in the company. However, as of late, the decline has stopped and it's actually started to move upward. And so one of the things that's really important for LikeFolio data is to look at what is the change in growth, what is the acceleration, and it's actually starting to move in the right direction. You can see here the happiness is actually a little bit above Lululemon, which is very surprising. Again, an 8-point move over the last year to go for Under Armour to go up above Lululemon on this chart. And just for those who haven't seen this type of chart yet, that up and down axis, that y-axis is how happy customers are with the product, and the left and right, the x-axis, is how much more or less they're buying or talking about buying the product. So you can see that Nike's doing very well, bringing in new customers, getting higher quantities of sales. But as far as happiness goes, the Under Armour has really made a big move over the last bit to pass Lululemon on happiness, which is unusual, and it's staying above Nike. So I think they do have that high quality. At least they're on the track to get there. And as I was saying earlier, they were on a decline for a long time, and just have started to ramp up. And you can see here the change in happiness year over year. So this isn't what they're at now, but this is the total change. And, you can see where they're at. They're making a big move when it comes to passing some people. Lululemon moving up 1%, Nike up 4%, but Under Armour moving up about 8%. Athleta still taking the lead and pulling ahead. But they're doing well. I think a lot of it just has to do with their strategy. So they are, they're shifting from being in the discounters and the department stores to going more direct to consumer in their own stores. And I think it's maybe just, cognitive dissonance or something. If you see Under Armour in a department store versus in the Under Armour store, or if you see it in a discount store, or if you see it online, it's just a different type of mentality. You're thinking it's a higher quality product. They can present their own products in a better way, as opposed to just being on the rack next to a bunch of other products. So good moves by them. And this is one of those that, again, it looked like declining mentions forever, but now it's turning around and starting to move up. And we love to measure the change in growth or the acceleration, and it went from negative to positive. So that's putting us bullish on this report tomorrow.
Yeah, Landon, CEO Patrick Frisk seems to really have turned this company back around. I mean, they had a series of missteps, as you know, probably the biggest one being what you just mentioned, trying to focus on discount stores. They have, it looks like, it appears from everything I read about this, and I read about Under Armour fairly a lot, is about their concentration on the focused performer, that athlete or that athletic person that works out several days a week, and upping the quality of their gear and the direct to consumer and their stores, which, let's face it, their stores got hurt during the coronavirus, right? They were starting their comeback when the coronavirus hit and they had to close all their stores. Now they're getting them back. I think the key thing for this earnings, though, is that return to that high level of athlete that they were so good at. And they're spending about $550 to $600 million on this restructuring. So the question is really, I think, for this earnings, Landon, and you can help us with this, is it on course which I think you're starting to talk about it is, and number two, is it going to cost them more money than the 550 to 600 million to get that? So, because it looks like they're starting to get their mojo back in terms of that focused performer, but is it enough, and are they on track, Landon?
Right. I think that's really key is they're starting to get it back. They were on a bad trajectory.
Right.
They're turning it around. I think some of it has to do with Project Rock, right? With The Rock, the athlete.
Mm-hmm.
I mean, he epitomizes the focused athletes, the person who's working out
Right.
multiple days per week, probably multiple times per day. And so I think you get somebody like that on board. We've actually seen a large amount of buzz around the Project Rock from Under Armour. So I think that is fantastic for them, just bringing back the focus into that sort of elite athlete, the person that is going to work out multiple times per week, and therefore is going to need many shirts and shorts and socks and all the stuff. Like you can't wear those. You can only do laundry so many times a week, so you got to have multiple pairs. So I think that's big for them. And then just like you talked about, it's the turnaround. And if I'm an investor, the 500 million obviously is a concern, but I'm more concerned with how much is revenue changing. Are they bringing in more revenue? Because that lasts a lot longer than the $500 million spend. That's probably just once. So if you can turn that around, it's forward looking, is all about growth, all about earnings in the future. And I think what we're seeing in our data is that it is starting to turn around. So as you guys know, we've got the earnings score -100 to +100. Under Armour comes in at a +41, which is a solid score. It's not mind blowing. It's not, buy all the calls in the world, but it's a solid score. And for me, with the stock at 22, and it's been at 22 basically since February. I mean, this thing it's bounced around a little bit, but really hasn't done anything this year. I think this is potentially the earnings release that could get it going upwards in that direction, up, above 23, 24. So I like I know we don't talk about trades a lot, but I like the 21, 23 vertical for this week. I like it a lot. Sit with 22 right there in the middle. I think you can get in for either just above $1 credit, or if you're doing a debit, just under $1, and it could be a good play. So that's what LikeFolio is looking at right now. And again, it's all about the change in course. It was declining. It's not only flattened out, but it's actually got a bump up in the right direction. So we're bullish going into this quarter.
Landon bringing the option trading heat. I love it. But looking at your data, and this kind of, piqued my interest a little bit, was the fact that you saw declining happiness in Lululemon. I don't know if you guys have ever reported that. But then also, with gyms opening back up, is that why you're seeing maybe that flows back into Under Armour as far as happiness and purchase intent, as opposed to Lululemon, which is more of a lifestyle type brand? There are people that work out in it, but when you're paying, $80 for a pair of shorts, maybe you just wear those shorts around town drinking your, mocha latte. But is that part of the reason that you're seeing this data kind of flip over here, Landon, because gyms are opening up around the country?
I think that's a big part of it. I also think you nailed the demographic on Lulu. I think that is, it's a brand that you want to wear a lot, not just when you're working out. And for the record, Lulu's got a +1 on the happiness. So they're still moving up. They're just getting outpaced by Under Armour and the others. So people still love their products, and I think they will continue to. But I think a lot of Lulu is more about wearing it every day, whereas Under Armour, I love the idea of going after that high performance athlete who needs multiple sets of the same kind of thing so that they can go to the gym, they can work out every day. And the fact that these gyms are opening up and people are working out more, I think that's better for Under Armour than it is for Lulu. I don't think it negatively affects Lulu, but I think it positively affects a company like Under Armour.
Gyms are opening up. Still wearing masks in mine, but that's okay. We'll get there. All right, Landon, thanks for all the data on Under Armour ahead of their earnings tomorrow morning. Have a great day.
Thanks, guys.